Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we were rolling through the comment section, reading some of your guys' comments, and looking at some of the uranium stuff. It says some people are expecting the sell-off to continue for the rest of the year. I'm reading some that says sell it all, bull run's over for uranium. You talk about short-term weakness in the charts, which I totally agree, but sometimes soon the longer-term charts are going to turn bearish. Will you be bailing on uranium positions if this occurs? Andy, this looks like a good 50% crash across the board. Can I correct you? It's not a pullback, it's a crash. ASX listed companies are looking extremely weak day by day. You guys are getting pretty bearish, and that's usually a good sign that we're probably close to a bottom in uranium. Now, I can't obviously say that we're at a bottom. The short-term charts still need to strengthen a little bit. But the thesis of the channel, I'm going to go back to the thesis. And when things look bad, or at least perceivably to yourself, I mean, I don't think they look that bad, but some people do think they look very bad. They're not used to sitting through a 50% pullback, and these things are incredibly volatile. The market conditions are ripe for a big bull market in commodities. And uranium is no different. It's a commodity. And we're looking at the valuations. Uranium is still an incredible value when looking at it priced to other assets. So I know a lot of people, if we knew exactly where all the turns were, where they turn from a top and then a bottom, we wouldn't have to ride through these things. We would know exactly what's going to happen. But unfortunately, no one knows exactly what's going to happen. What we can discern from all of our data that we have access to is that, one, it's historically cheap. Two, the market conditions that are coming up, in my opinion, are conducive for bull markets in commodities. We can also see with some of the long-term charts that we've got in uranium companies themselves, is that they're barely getting going. And maybe I'll pull one up to show you guys. Hopefully I've got some uranium ones here. I've got Bannerman here. So I've got just one Bannerman. Oops. We'll do that. Get me out of the way. We've got a downtrend move. We've got a sideways move. We've broken out of this pattern. And remember, this is from 2008 to 2021. So usually what happens in a big downtrending move is you get the momentum coming down, it flatlines, which this is the flat line from 2013 to 2020. We break out to the upside, and we just freshly broke to the upside here. And we have all this volume. So, and all of the charts look very similar to Bannerman here. They're just different, they're just slightly different. They're all of the same ilk. You get a big downward motion, you get a sideways motion, and then you get an upward move. And this upward move has all this volume tied behind it. You can tell that this was going to turn before it turned, I would say, in this 2019-2020 period where the volume started to kick up. It's like, ooh, this is going to get fun. This is exactly what I look for. Now, we've broken up. This thing could pull back a good chunk on a return move. And other companies, they could pull back quite a bit as well. And the thing when you're an investor, all right, all you can do is you can identify where the value is. And the short-term movements, I mean, guys, the very, very short term, it is very difficult to know where things are going to go. We've got lots of people looking at this. It's not just myself. There's a whole bunch of other people, and people will continue to call bottoms. They're going to remain positive, which is good. You want to remain positive. The way that you make money in these markets, and it has nothing to do with reading charts. It has nothing to do with the actual information that you're getting. You're going to have to develop yourself. I mean, literally, to hold on to these things and remain a bull when the market conditions validate you being a bull, because that's the only time you can really hang on to these things, is when the market conditions are ripe for it. Now, I just showed you this pattern behind me in Bannerman. It's obviously downtrend movement, sideways movement, and then we're coming up. Will the overall market, if we have weakness in the overall market, affect these stocks? I'm thinking yes. Now, does that mean that you go and you sell all your stocks? I'm not. Now, that's up to you. If you want to bail out and you're 50% off your all-time highs, that's up to you. I'm sticking through it. And why am I sticking through it? I'm going to show you a chart here. I can show you why I'm sticking through it. So let me pull this up. And here's some charts. We've got here's another chart I've got. And this one was done by North Star. And I had to save it because it was such a ridiculously awesome chart. What this is the producer price index by commodity. It's all commodities. And the producer price index usually leads the consumer price index. And what you see here is you see some very large advances in the PPI. We had a very large advance from the 1930s all the way up till the 1960s, 1950s, I should say, 1950s. Big move. This here from 45 to 50 of this inflation here is when you want to be invested in commodities. And then we had a sideways period. Then we had another break in the 60s all the way till 1980s. And then they kind of went sideways from here on out. And now what you notice is we've got this massive consolidation period. And this consolidation period has broken to the upside. This is where we're at. This is where it's going to get massively fun. And this is just, they're all leading indicators. And I can't find anything. I can't find anything. There's not hardly any information or charts or data that I can gather where I should not be in commodity type companies or precious metals. I just can't find anything. If your producer price index is breaking these patterns like this, these are big long-term patterns. It means that we're coming up into an area where we're going to see higher rates of inflation. And I keep coming back to the big long-term picture. We had C19 in that crash. Did it stop the move in commodities? No, it didn't. Well, what makes you think something else is going to stop it? This is structural. This is like something that has to happen. It's got to go up, in my opinion. Now, I could be wrong. Maybe I'm missing something. But I just don't know what. Like, I can't find it. I'm driven by charts that like this one behind me. I'm driven by how humans interact with each other, create these charts through millions of transactions. Every day, there's all these transactions going on. And it's creating these patterns. This is just saying that we've got a bunch of inflation in the system, and at certain points, that inflation gets unlocked. And that unlocked portion is the expansion phase of real estate, in my opinion. We're 5.5 million homes short, according to Realtor. What makes me think that this time's any different? It's done it every single time in an expansion phase with commodities cheap in relationship to stocks. So everything is aligned. And when it's aligned, I mean, where else am I going to put my money? That's another question you can ask. Uranium is incredibly cheap. Oil and gas is incredibly cheap. All these things are cheap. We know how to identify how cheap these things are using ratios. Platinum's cheap, silver's cheap. We know for a fact that is cheap. For a fact, not my opinion. It is history telling us that these assets are cheap in relationship to other assets. So that's a fact. And the market conditions are changing to an expansionary phase of real estate. That is a fact by the definition of a real estate expansion phase and where we are in the housing starts. That's not my opinion. It's just a fact. So everything in terms of conditions and valuations that I can tell, and the charts that we have similar to this, is showing me that we're going to have a big boom. Now let me pull another chart up. Here it is. This is the valuation of uranium. This is pound of U3O8 in gold grams. Now, one thing that you can notice is that it stays cheap for a long time sometimes. This here was from 1990 all the way till later 2003 or 4. 2003. We are probably early in this mix. And it could go sideways for a little bit, because this was more towards the end of the expansionary phase than the beginning. And right now we're at the beginning of that phase. So maybe we're just early, but this chart is signaling that uranium is incredibly cheap. And the way that you do this and the way that you can make money is you go into cheap assets and you just have to sit in them, guys. You just have to sit. You have to be patient. Those who are patient will be rewarded. And the uranium mining companies have had massive moves. So having a pullback of 50% or even more is probably okay. It's absolutely normal. But some of these companies have gone up, 10x already. Like an Encore Energy, it's up over 10x plus. And Bannerman, that went up over 10x, and obviously it's pulled back recently. But those are big moves, and they're going to have to digest those moves. So things don't go up straight up. And the valuation of uranium in relationship to all other assets, especially gold here, is incredibly cheap. So if I were to sell out of it, like some of you guys are suggesting, is the uranium bull market over? Where else are you going to go? There's nothing cheaper than this. And your leverage to the price move under these market conditions, there's nothing greater. So tell me where you'd go. What would you buy? Are you going to go into dollars? Dollars, we have massive inflation. The index can go up, but the value of the dollar is going to continue to decline. And what we talked about this in one of the videos recently released about the dollar going down something like 60-something% since the year 2000. That is a ridiculous amount of purchasing power it's declined. So I'm not going to hang out in dollars. There's no way I'm going to be stuck in the dollar. There's no way I'm going to be stuck in bonds. They all just lose money continually. So I got to go into assets, and I have to go into stuff like uranium and oil and gas, and it's going to be volatile. It's gonna be feeling like you're getting kicked in the nads every once in a while. I don't like it. I don't think anyone likes it. You just kind of have to live with it. You gotta adjust that paradigm a little bit. Now, another thing that you can think of is, why are you investing in this stuff? What's the whole point of this, right? I'm doing it for my independence. I'm doing it to gain my independence and freedom, so to speak. And this is the best way to do it. This is the identified value in the world, the best value with the highest amount of leverage. So I'm going to put some money in it. I'm not putting everything. I'm putting some money into it. I'm putting some money into oil and natural gas. I'm putting some money into some of these minerals. I'm spreading it out. I've got precious metals games going on with the swapping ratios, swapping at certain ratios and increasing my ounces. Now, if I were to sell these, where would I go? I've already identified where all the value is. I already know what's going on. And these valuations, these ratios have not failed me over time. You may have to stay in an asset longer than what's expected. That is your potential opportunity cost. We are still early in this expansionary phase, and usually some of these, they may take off when we're in the middle of the expansionary phase. Potentially, maybe not. Nobody has the exact answer, and that's what makes it difficult. So what I do is I find the undervalued assets, I pile into them, and I just hold on. I hold on until they become overvalued. The market conditions are changing. We can see the inflation in all of the numbers. Now, the debate is, how sustainable is that inflation? And I was looking at some other information here, and I'm just looking at this stuff. I'll kind of get out of the way here. It says, why is Turkey's lira crashing, and will the currency crisis worsen? The lira lost nearly 30% of its value against the United States dollar in November. Myanmar currency dropped 60% in weeks as economy tanks since February coup. And that's in September 29th, 2021. Their currency dropped 60% in weeks? My God. The kyat continues freefall as Myanmar faces full-blown currency crisis. Some currency sellers have shut their shops amid a shortage of dollars. A shortage of dollars. 3/4 of Lebanon's population is now living in poverty. The Lebanese pound has lost about 90% of its value against the US dollar. And much of public life has been paralyzed due to power cuts, staggering food and fuel inflation, and medicine shortages. We're seeing all of these currencies around the world, a lot of them, with massive inflation. And I think it's going to head to Europe. So the protection against this that's behind me are commodities and precious metals. We are seeing currencies drop, and this is Brett Johnson's milkshake theory. It's playing out. Currencies are dropping against the dollar like no other, and they're dropping against probably gold and other currencies. So I think what's going to happen, and this is Thesis 2.0 that I put together recently, is everyone's going to run into the dollar in the beginning. Commodities may not go anywhere, or they're going to go up because there is inflation, but they're not going to go up as fast as, say, a declining dollar. I think everyone's going to run into dollar-denominated assets in the beginning. And then, when this inflation junk garbage works its way out throughout the world, there's going to be a battle between precious metals and currencies in its entirety. So, when you ask yourself, where do I want to be? Where should I put my money? And this is not financial advice, guys. This is just my opinion. But when I see this type of currency crisis happening all over the place, it makes me a little bit afraid. I mean, it's like, man, these guys are getting smoked. When is it going to come to America? And I don't have that answer, but I can tell you, dollar-denominated assets are going to be where people are running to. That could be stocks. It could be American real estate. That's dollar-denominated assets. And all of this could go up quite substantially because the entire world's going to first run into dollar-denominated assets. What happens after that? If the market conditions are ripe for a commodity boom, all of that money that ran into dollar-denominated assets could run into commodities and precious metals. Now, the thing that it hinges on is the interest rate. The interest rate is going to put pressure on certain assets. And I think what you need to look at is we've got all these currencies tanking. People are going to be running to dollar-denominated assets. Now, what's going to make people run out of dollar-denominated assets? Inflation in the dollar, and they're going to have to inflate the dollar. You know why? Because if they don't inflate the dollar, all of these currencies are going to crash even worse. Because if they're already having problems around the world with their currencies, and our dollar is getting stronger, and that's with us printing like heck, well, on a relative basis, we need to print just as much as them or more, especially if they're short dollars. So this is going to get very weird. Now, if we have massive inflation, we start catching up to these guys, and I'm not saying these guys in particular, but just in general, if inflation everywhere is quite bad, at some point, people are going to change their paradigm and start running after these commodities and precious metals. And we're just there first. I can tell you for a fact they're cheap looking at the valuation ratios. They are cheap in relationship to stocks. They're cheap in relationship to all these other assets. And we're in some of the cheapest of those commodities. And they do incredibly well during inflationary periods, especially platinum and silver and gold and the companies that are with it. Energy companies are some of the biggest inflation hedges against inflation. So I think it's coming. We just got to wait, and we got to be patient. I'm doing this. I've got my own money riding on this stuff, guys. I'm right there with you. Every kick to the nuts, I'm feeling it too. And to me, I've just zoned it out. I don't feel that kick anymore. It's like, whatever. I gotta wait. But the positioning, I think, is right. And when these currencies start failing all around the world, it's coming. And what's going to happen is the dollar's just going to be the last one standing, I think. And eventually, gold's going to come for it. And if you're in gold, you'll be okay, or silver, or whatever. Doesn't matter what it is. If you're in one of those, you're going to do just fine. That's the way I'm looking at this. It's a protection against all of this. So that's my opinion on it. I think in terms of valuations and where I would want to be, I'm going to continue to buy physical precious metals. I'm going to continue to buy uranium and oil and all of these kind of anti-inflationary investments. Did I say that right? Ones that protect you against inflation. There, that's how I would say it. And food would be a good one too, and whatever else. But I think it's coming. I would be patient, and I don't know where else someone should be. I'm not going to go buy overvalued stocks with the potential of inflation and interest rates rising. And maybe they hold interest rates down. Maybe that rotation never happens as big as I think it does, but it doesn't matter. This money is going everywhere. It's leaking into all these different assets. So I'm going to hold on. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.